Welcome to Bears in Exile. Today is Monday, December the 10th, and this is the market overview, looking at everything that we look at every single night. And this is going to be the last week, I believe, for the regular nightly videos. Come this weekend, we'll be moving to screenshots of things that are important, and getting away from nights with videos on days where it's choppy and stuff, and don't want to waste anybody's time. So anyways, here we go. So, not an impressive day, not a bad day, but certainly a day of development. So I'm still thinking that there's going to be some kind of little pitfall with the fiscal cliff, even if it's just temporary, and I'm waiting for that to rear its head. But in between now and then, the market continues its very gradual, sometimes not gradual, move on up. The Dow up almost 15 points today, ending with a spinning top at the top of a possible range. Not the greatest candle, but still above the upper price consensus level for the month of December, within the descending channel. And what else do we have to work with? Well, we have the start of a topping area in the heat map. It isn't drastic yet, but certainly it could get there pretty fast. I mean, it normally starts off gradual like this, so something to be aware of. We have the CCI high. Matter of fact, I'm going to bump this back a little bit so you can see. CCI is high. The stochastics are high. The RSI is very high. The 14-day RSI moving average still has room to move. We're still going up on the MACD histogram and the MACD, which has gone positive. So, all in all, good positioning of everything, but we know that time is probably running out on the bulls in the shorter term. We were looking for that rollover back here. We canceled it once it became evident that it was not going to really roll over for a decent move, and now it has been in the upright position for an extended period of time. So there isn't much left here, in my opinion. But other than that, not bad. Not bad. A little more development, and we'll have a turn area here pretty soon. So just waiting for that, at least a short-term turn. And moving on to SPX. Still not as nice as the Dow. The Dow did make a new recent high today, so did SPX. That is good. Ended with a spinning top, only up half of a point. Not spectacular. Unable to close above the upper price consensus level for December. And also, like the Dow, building a topping area. And everything else is the same, with the exception of the MACD histogram actually slanting down, the regular RSI rolling over. So this is a little bit worse than the Dow, and it looks a little bit worse. I mean, just looking at the candle and everything. So, anyways. And it hasn't reached the halfway point of the descending channel either. So this one is lagging, and it does look slightly worse. I didn't look at the 60-minute for the Dow, so I guess I should do it for SPX. Here we are with the 60-minute on SPX. Very nice move up from its low down here, just shy of 1400. And what do we have to work with? Well, we have nothing in the heat map at the moment. We do have what it would appear to be a rollover on the CCI, the stochastics, the RSI, the histogram, and the MACD trying, and the 14-day RSI moving average running out of room. So 60-minute, definitely more bearish than bullish. And in addition to that, we do have some negative divergence, kind of considerable amount actually. MACD histogram, look at this, huge negative divergence. The MACD itself, negative divergence. The stochastics, negative divergence. The 14-day RSI moving average, negative divergence. The RSI, negative divergence. And the CCI, negative divergence. It's everywhere. It's everywhere. So that, to me, tells me that there is going to be a down move coming soon. Doesn't mean it's going to be tomorrow, but soon. And that would seem to play out well with the daily running out of time. Now, where would this take us? Well, if we were going to look at the genesis of most of these divergences, not all, but most, we have the MACD histogram here. We have the, well, it's debatable about the stochastics a little bit, whether it's here, here, or here. So we'll look at all those, but definitely the CCI, same place as the MACD histogram. If we were to go off of those, we would be looking at 1385, roundabout. And if we're going to place it a little bit farther with the MACD itself, the RSI, and perhaps the stochastics here, and definitely the 14-day RSI moving average, then that takes it right here to 1402, 1403, roundabout. So that's what we'd be looking for. And after that, that divergence will be fixed. So one of these two, I'm not sure which one. Of course, if it's this one, it'll be both. But anyways, two targets to look out for. And in the case of a 1 day or 2 day panic about the fiscal cliff, could those be reached very quickly? Absolutely. Absolutely. So, I mean, a 20-point down day would take care of the first, and the second day of selling would take it down to the second. So, there it is. There it is. Going on to the VIX. All right. So this has been working out really well. We said that it would have problems with the 200-day moving average, which is where it had problems before. It has moved down. It's tried to get back up. It has failed each time. And what can we figure out from this? Well, we have a bottoming area in the heat map. It isn't drastic, but it is decent. We have the stochastic still moving down. We have the MACD histogram going sideways, the MACD itself barely going up, the RSI going up, the CCI going up, the 14-day RSI moving average still stuck down. I'm going to zoom out a little bit just to see how much room we have to move. Well, we can see that the 14-day is pretty darn low, so we just need to see it turn. And the stochastics could go all the way to the bottom one more time. So that's why on the daily I say there is time is running out on the Dow and SPX, but it still has a little more time because this needs to go down and turn up. So anyways, that's what I see. That's what I see. Could this take us all the way back down here to the floor at $15 roundabout? Yes, it is entirely possible. But that's about all I see. So daily VIX, bad, and a little farther out, yeah, I don't think it's going to collapse. Not yet, anyway. Going on to TNA, small caps. And we can see that small caps just having all kinds of problems, just going sideways right here, but still holding above the descending channel, and still below the upper price consensus level. Making really good attempts to get above it, but unable to break out. Very interesting to me on this. We have a higher low than the last 2 market days, which is a positive. People are buying this. And we still have a topping area in the heat map. Beyond that, 14-day RSI moving average still moving up. So once you have all the other secondaries turn once again, yeah, you can have a breakout of this pretty darn easily. I would have been looking to see if it would break this descending trend line, and it has not. It's only tested it a few times. And everything else still slanting down. MACD histogram, RSI, CCI going sideways, stochastics down, MACD up. So very, very mixed. Just about it breaking one way or the other. And in the longer term, it would appear to be that it will be up. And UUP. Yeah, the dollar. We have our so important support resistance line here. We're above it once again, even though it was red on the day, it did gap up. Very nice. Beyond that, 14-day RSI moving average still moving down. We're waiting for a secondary reset to complete with the stochastics, CCI, MACD histogram, MACD all going up. Where would this go? Let's see. Well, I would think that the logical thing would be a gap fill here. That seems logical to me. And once that's complete, all of this should be finished, and then it can roll over once again, which would be positive for the market. Even with the dollar going up, the market has not gone down. So very, very interesting. When the dollar finally goes down, if the market is just held sideways and slightly up, it's going to be a huge positive for the bulls. So very curious to see when this finishes, so that I can definitely not be in the bulls' way. And going on to GLD. Look at that. We have an uptick today. Excellent. And the uptick gives us a target of barely above 166. Bottoming area in the heat map, it works. 14-day RSI moving average going sideways, stochastics going up, CCI going up, RSI going up, MACD histogram going up, and only the MACD still going down. Definitely more positive than negative, and with an uptick target. Outstanding. SLV, silver. Yeah, not as helpful now, is it? We've got an uptick today. It was resolved intraday. Didn't have good expansion of the short-term moving averages, but this is still looking better than gold in many ways. Just by its positioning, it's been able to hold in much better. If we're going to have a move up, silver should benefit better. It still is inside. Actually, now it's above the long-term moving average bar, which is bullish. And we have the 14-day RSI moving average still moving up. The stochastics mix, CCI going sideways, RSI up, MACD histogram down, MACD down. Indicator-wise, yeah, it's not as good as gold, but its position will win out in the end, I do believe. And CompQ, the NASDAQ. This one sure isn't looking too good at the moment, at least in comparison to its brothers and sister charts in the Dow and SPX. Going back down to the 200-day moving average, losing the ascending trend line once again. It's done this 4 days in a row. Not a good sign. Mixed on the stochastic, sideways on the CCI, up on the RSI, down on the histogram, and barely up on the MACD. 14-day RSI moving average still going up. So intermediate time span, yes, it's going to be bullish, and it should break out of this. But for the moment, it's having all kinds of problems and struggling. Don't have anything at this moment which would suggest that it's going to break out like tomorrow, but yeah, that's tough. And going on to Apple, which is the bane of CompQ's existence, trying once again to go up, smacked right back down. Bottoming area in the heat map. The stochastics, fortunately, are almost done with their move to the bottom. Everything else moving down as well. MACD, histogram, MACD looking at a bearish cross. Down on the RSI, down on the CCI. The 14-day RSI moving average is still up. We just have to have this conclude, and this one should get a really nice move back up. But we don't have a clear sign yet. It looks like it wants more time. And GE trying to get a better read on the Dow. Very nice. Very nice. New recent high. Very pretty hanging man. Possible reversal. Above the upper price consensus level. Nothing in the heat map. Everything is moving up with the exception of the RSI going sideways high. So even though this is a possible reversal signal, we don't have anything anywhere else saying that it is. So for the moment, I would say more bullish than bearish, but certainly this could be a good warning sign. Just don't know yet. Just don't know. And JP Morgan, most important bank. Look at that. Ridiculous. Gap up outside of the upper Bollinger Band, beating the upper price consensus level from the last month and totally demolishing the upper price consensus level from this month. Definite blip in the heat map for topping area. We do have a volume spike. Could be higher, but it's still pretty darn good. You'd have to go all the way back here to November 7th for something that's larger, and all the way back to October 12th for the next large target. So this is nice, and I really want to see if that rolls over. And XLF, the financials as a whole, hanging man outside the upper Bollinger Band, very similar to JP Morgan. Dark blip in the heat map, everything moving up, but no volume blip. Interesting, isn't it? No volume blip. So this is not as nice a possible reversal signal than JP Morgan was. Very interesting. And USO oil, when oil is bullish, the market is bullish, and oil was not bullish today. So oil and the dollar not going hand in hand with the market, which is unusual, which is not right. Closing below the major price consensus level for this month. We do have a bottoming area in the heat map. We do have most things going down with the exception of the 14-day RSI moving average. So we're just waiting for the secondary reset to complete. This should be going back up, and when it does, that will also help the market. So even though USO and UUP are not cooperating with what the market is doing, they're both in areas where they can aid the market when they reverse. In USO's case going up, and UUP's case going down, both of which seem to be likely in the near term, which would produce lift for the market. And there it is. Very interesting. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you very much.